We've got, I think, a quarter point and 0.25% being indicated, so as expected. And, of course, that means it's now at 4.25%. Not as high as it could have gone, Liam, but indications, of course, that the inflation that we saw this week coming through is actually what they call domestic. It's not coming yet from the international sector, so that the bank is hoping really this will have a direct effect on bearing down on this inflation.
I think that's right. Let's just take a look at a graphic and we can put this latest interest rate rise in some kind of historic context. If we look at this graph, and radio listeners can bear with me, we see from 2017 interest rates were gradually rising to 1% as we came out of the financial crisis. Then lockdown happened, interest rates went down to 0 and then 0.25%. And then, since inflation really ripped in the back end of 2022, we've seen 11 successive interest rate rises there to 4.25% today. That's a 14-year high in interest rates. It's not particularly high by historic standards, but I must say it feels really, really high if you took out a mortgage, any time since 2008 when interest rates have been much, much lower. I think a real problem we have, Mark, is that a lot of people in financial markets, they're not used to interest rates at this level. Yeah. That's why so many people have been caught unawares with the fact that holding government bonds, when interest rates go up, the value of them goes down, the price of them goes down, your balance sheet looks weaker. That's why lots of banks have been in danger of toppling over, as it were. But I think in the here and now, this is not as bad as it could have been. This will add about £350 to the mortgage of an average household with a £200,000 variable rate mortgage. That's an extra £350 a year on their payments. That's pretty painful. If you're a saver, Mark, do get onto your bank and say, are you going to pass on this interest rate rise to me? A lot of banks are not passing on those interest rate rises to savers in full because our high street banking system, sorry, but it's just not very competitive. Yeah. So customers may have to shop around if they want to feel the full benefit of that interest rate rise. It could have gone up 50 basis points, 0.5%, Mark. I don't think that was expected, so we've ended up with a quarter point rise.
Yeah, and as you're saying, clearly the fixed rate deals at the moment have come back a little bit, so there's a bit of wriggle room perhaps for people trying to work out their mortgages. But the other aspect of today, of course, is that we get Andrew Bailey there at the bank indicating what they think is going to happen in the weeks and months ahead. They get this forecast for the economy. And the other key element about all this is, what growth will be coming into the economy to help to things make easier overall, and indeed what dangers that could still be out there in the banking sector.
That's right. This will be the first utterance from the Bank of England, the minutes of this meeting since the budget. Of course, at the budget, Jeremy Hunt's latest budgetary statement, we had new forecasts from the Office of Budget Responsibility which showed the UK avoiding recession. Not great growth, in fact, still contracting this year, the economy, but by a lot less than was previously thought. That, of course, will be good news to most households. But it'll be interesting to see, Mark, what I'll be looking for when I get off this discussion with you and manage to look at the minutes, is whether or not the bank has changed its outlook on inflation because of that number we had earlier this week, that February inflation. It went up from 10.1% to 10.4%, when I think most people expected inflation to fall further. It has been on a downward trajectory. Will the Bank of England change its inflation outlook because of that February number, or will it view February, as I suspect it will, as a bit of a blip? That will be really interesting, and what the bank says on that will impact financial markets and where mortgage rates go from here.
Yeah, because we had that sort of shortage of fresh fruit and veg, of course, in January to February. We have got a little bit coming through now, Liam. Let's just run this past people, because this is a bit of good news, just to add to the doom and gloom. And this is, we were talking about growth and their forecast. The bank is saying it expects the UK economy to grow slightly between April and June. Now, that's revised its previous forecast, you remember, when they said that GDP or growth would actually drop by 0.4%. So they are seeing a few of these green shoots out there.
Some of us have been saying it for a while, Mark.
There we go.
Indeed, look, the Bank of England was previously very, very gloomy. The Bank of England was forecasting a recession and economic contraction lasting for 5 successive quarters, over a year. The OBR, the Office of Budget Responsibility, is now slightly less gloomy, and the Bank of England as well. And look, these forecasts made by people with spreadsheets in, behind closed doors, they may feel as if they don't matter to ordinary men and women trying to make a living and do the best for themselves and their families. But these forecasts do matter, Mark, because they influence financial markets, they influence investment decisions. They're poured over by business leaders, whether the business is big or small, whether or not they're going to take on more people, whether they're going to invest more in their business. And so these are important forecasts, and it is good news that in general, most economic forecasts, albeit from a low base, of growth, of the UK's economic performance are now looking up. And I also think a little bit of good news, just to sweeten the pill, is that this will be the last interest rate rise in this cycle by the Bank of England.
Yeah, just to indicate their thinking, we're just learning that 7 members of the Monetary Policy Committee, this is the committee that sets the base rate, voted to increase by 0.25%. 2 members, Swati Ringra and Silvana Traneo, voted against the rise, arguing some of the recent increases in the base rate have not yet filtered through to the real economy. Now, that's quite an interesting point, isn't it? That the fact they've been pushing all these months, when does it actually have a direct effect on the economy?
2 things stem from that. The first thing is that none of the 9 voted for a 0.5% interest rate rise, so that was never going to happen. Second thing that's interesting about that is that you've now got respected members of the Monetary Policy Committee voting to keep rates on hold. Not only because, rightly, they're saying that, look, we've had 11 successive interest rate rises. They take some time to work their way through the economy, to influence decisions both by households and firms. That's exactly right. There's a lot of monetary tightening in the tank, if you want. So, if you will. So that is an important point. I think another really important point also, though, is that increasingly, I'm sensing this, increasingly economists are saying, hang on a minute, this inflation that we've got, it's not actually inflation because people are spending too much cash. It's not inflation because businesses are investing too much. On the contrary, consumer spending is pretty lackluster. On the contrary, business investment is still in the doldrums. The inflation that's coming through, it's supply chain inflation still. It's the implications of lockdown. The global economy has not yet fully rebooted. It's the implications of the fact that farmers across Britain and elsewhere paid a lot of money for their fertiliser this time last year in the immediate aftermath of the war in Ukraine. They paid a lot of money for their fuel when they were sowing their crops last summer. Those high numbers are still in the mix. That's why food inflation will linger. The price of going to a restaurant or hospitality industry, enjoying some of that, those prices will stay high. So inflation will take some time to pass through the system, though I do think we'll see sharp annual falls in the price of fuel and also in the price of electricity, utility bills coming through this spring and summer, which will pull the headline rate of inflation down. I do think Rishi Sunak will hit that target of halving inflation to around 5% by the end of the year, although it will be nothing to do with him and his policies if he does.
Yeah, OK. Well, we've got the latest snapshot anyway. Liam, thank you for updating us there at the bank. Just to reiterate that breaking news, we've got a 0.25% rise in the base rate.